Welcome to Markets Now. I'm Michelle Rook with Kent Beadle with Paradigm Futures. Mostly lower prices except for the cattle market this morning. And I feel like we're a broken record here on the grains. We did have a little export business on corn to Mexico this morning, but other than that, this market, it just seems like fund selling is about all we ever talk about.
Yeah, and the market seems to want to ignore some of this better demand that we've seen. In fact, I continue to hear people talk about demand being disappointing, even though our export sales in corn are 30% ahead of year-ago levels. And of course, the USDA is forecasting about a 26% increase. So we're even ahead of that. And you mentioned the sale to Mexico this morning. Mexico has been one of the best buyers of U.S. corn. But we've also been selling corn into Canada, and we've been selling corn to Asia. We're the cheapest corn in the world right now, and we continue to be able to export corn despite all of the export issues that we have with the Panama Canal and world shipping issues around the Red Sea. And, but we can't fight the speculative selling that we've been taking on. And, spec selling was higher again on the CFTC report last Friday. And, if you look at the way the price action has been, it's pretty clear as to see why we've been going lower.
Yeah, in fact, you said this is one of the shortest positions combined that the funds have ever had in this grain market, right?
Yeah, if you add up corn, soybeans, meal oil, and the 3-week contracts, I think it's the second shortest in history.
So we need a bullish catalyst. Things that are coming up that maybe would give us some hope of that would be the WASDE coming up here on Thursday. But what are you expecting in that report?
Yeah, we're not really expecting all that much, to be honest. We could see a slightly higher export number, as we've talked about in corn. We might expect a higher ethanol production number, but probably won't get one because we had this little slowdown that was due to weather issues here in the month of January. So they might hold on any adjustments on the ethanol grind. I don't think they're going to do anything with feed residual usage. Over in the soybeans, we had a large enough crush that we could see an increase in crush, but we probably won't get one for the same reason. I think crush slowed down a little bit in early to mid-January due to weather as well. Yet exports, of course, have been slow, and they have turned a little bit behind year-ago levels or the pace that we need to hit USDA numbers. So you could see soybean ending stocks rise a little bit. I would make the case that at $11.85, we're pricing in an ending stocks number that isn't anywhere close to 280. It would probably be something closer to 350 million bushels than the 280 that we've got on the balance sheet right now.
Yeah. So the other thing we're going to be watching for is any adjustments this week, either CONAB or USDA in terms of South American numbers. And actually right now we are seeing continued pressure here in the soybean market, especially not only from harvest pressure from South America, but is there not a little rain now in Argentina?
Yeah, there was a little bit of rain that popped up this weekend that was maybe unexpected. So that was one thing that is a little bit negative. And then, we saw at the end of last week that we were still anticipating a better Argentine forecast, and that's still out there. They are going to get better rains here out about 3 to 4 days. And it's kind of interesting, the ratings of that Argentine crop, nearly half of it is in the fair category. And that's sort of a marginal condition rating that could get worse if we don't get the rain. And it certainly could get a lot better if we do get the rain. So I think the rains that we're going to receive or that we're forecast to receive are actually going to be pretty important in Argentina.
Yeah. So do you expect we're going to see many adjustments downward in, either CONAB's numbers this week, Kent, or USDA on those South American, at least Brazilian numbers?
Well, my expectation is that the USDA is going to be slow, if not really slow, to lower their estimate. I'm not sure why it is that the USDA is wanting to disregard, the privates. But, I go back to last year, for example, and CONAB's production number is about 5 million tons lower than what the USDA ended up with. And and Argentina's numbers 5 million tons lower than what the USDA ended up with. And that's a year later, and we still haven't moved. So I'm not expecting the USDA to lower that number very much. CONAB will be very interesting to see. Obviously, the early yield results have just not been very good, but people have a lot of hope for the later harvested soybeans because we have had better weather for those. But yet the privates in the industry are all coalescing at something around 150 million tons, probably down to 145, with a couple of outliers as low as 135. And so it's going to be very interesting to see what CONAB does, and we all want to know what that number is going to be. But we're just going to have to wait here until I think it's probably Wednesday when we're going to see that number from CONAB.
Absolutely. Let's slip over to the wheat market. Despite escalation in these Middle East tensions or this Middle East conflict, wheat is trending lower here this morning. Why have we not been reacting to this? Is it because it's slowing down shipping and that's kind of the offset here, or what?
Yeah, I mean, I think that's one of the concerns for sure. I think one of the big issues is just we have not seen the declines in Ukrainian exports that we thought that we would since the beginning of this conflict. And last week, we heard the Ukrainian government say that they're ahead of a year ago with exports, despite the fact that you don't have the UN-sponsored export corridor. They've been going it by themselves, and so far the Russians, although they've launched attacks on port facilities both in Odessa and on the Danube, it just hasn't done much damage or had much impact. And so right. We just can't seem to get wheat going. Now, I will say that technically, we haven't made a new low in Chicago for I think over 8 weeks, and the charts have sort of an appearance of a bottoming pattern to them. We reversed off of contract lows in Kansas City a couple of weeks ago. So I don't know that the market really wants to be lower, but it certainly doesn't do well after rallies. It finds plenty of willing sellers on rallies still.
But to your point, we've thrown a lot of bearish news at the market. It's still pretty much holding together here. So I guess we'll take that as a little bit of a victory. Cattle market.
Small victory.
New highs for the move last week, higher weekly closes in the cattle. And this morning, we're seeing just a little bit of follow-through buying. Ideas here that cash is going to be higher again continue to kind of push us this morning, or is this all fun buying?
Yeah, I think the cash call this week is 1 to 2 higher, and obviously the implications of the inventory report last week are still supportive. There's been a lot of chatter that we would start to see some pickup in rebuilding this herd, and based on all of the data in that report, that is not happening, and it sort of gives us a sense that we could have another whole year of fairly firm prices, and that's how the market reacted last week. And we're starting out the week this week pretty good as well, although again, with lower corn prices, we've seen cattle crush margins, for example, improve here this past week, and there is some opportunity to hedge some profitability in that industry, and so we aren't going to go up every day, that's for sure.
Hogs going the opposite direction of cattle this morning. Have we just hit some resistance and are seeing some profit taking, or what's going on this morning?
Well, when you look at those summertime prices between $96 and $98, again with the lower corn market and meal that's a lot more inexpensive than it has been for a couple of years, it just it helps the margin structure, and I think what we have today is probably the realization that there's some hedging opportunities there, and I think you've got some Probably some integrated operators who are taking advantage of that opportunity to, to price some decent margin in for these summer months, particularly.
You bet. All right. Thanks for joining us, Kent Beadle with Paradigm Futures. That is Markets Now.